One thing that we are super interested in and spend a lot of time reading about is cycles, which is a tough thing to kind of understand, but Ben has gone so deep into this stuff, and gosh, we are so grateful that you have done it. But one of these things is a mid-cycle slowdown that we talk about, and we were talking about a hell of a lot in 2019 and 2020. Now we're sort of coming through the back end of it. We thought we'd give you a bit of an update, let you know what's happened, and talk about what's expected to come in the future as well. Why don't we kick it off by just explaining what is a mid-cycle slowdown for those people that haven't been listening in the past?
You know, the mid-cycle slowdown is effectively that pause in a real estate or economic cycle, you know, in between like a GFC and a GFC.
Yeah.
So, you know, let's say a market over a 16 to 18 year period goes like this. I'm going to put my little cuppa down.
Yeah, let's go it.
We go up, we have a mid-cycle slowdown pause or decline, then we go up, and then we have a crash.
Yeah.
Now, what we're referring to is what we've just been through, the coronavirus, which is the mid-cycle slowdown.
So what generally happens during a mid-cycle slowdown? Like, what are the big things that happen?
People lose their shit. First and foremost, people fight over toilet paper.
Yeah.
People freak out. Now, what really happens is, economically speaking, generally the governments get into debt, into deficit, to try and bail countries out. We normally see property prices around the world drop by as much as 10%, which we saw in Sydney and Melbourne.
Yeah.
We saw in parts of Brisbane temporarily, in other parts of Australia. Definitely saw it in a bunch of the European cities. And then, most importantly, the stock market gets belted.
Yeah, cops are hiding.
You know, 30 to 50% declines is what we've seen in the last sort of 4 or 5 of them.
Yeah, so mid-cycle is more stock market crash than property market crash.
You know, and we know, and you guys know, that the stock market is really just a sentiment guide.
Yeah.
And when people are feeling scared, they sell. When people are feeling great, they buy.
Exactly. I guess to make this a little bit easier, let's talk about history. Let's talk about previous mid-cycle slowdowns, because that's probably going to make it a bit more relatable.
A guy called Fred Harrison went into 350 years worth of this data in Europe, and then another guy called Phil Anderson went into about 250 years in America to see if there was a similarity, and it was almost identical.
Crazy.
And so when we had our freak out moment, I think we just got back from Palm Cove in Cairns last year.
What happened the last few days in Palm Cove are like the most relaxing trip, sipping cocktails by the pool, going snorkeling on the Great Barrier Reef, going climbing through the rainforest. Next minute, it's like the world is in a pandemic.
I literally came back and I had 180 calls on my phone from previous clients going, "What's happening?"
Yeah, it was so crazy.
I remember like coming back and I was working from 6 a.m. till like 12 o'clock at night for like, I don't know, I did that for about, honestly, 9 weeks. It felt like 5 days a week. I was just like figuring it out mode plus survival mode plus talking to client mode.
At the beginning as well, like Phil went real quiet.
Yeah.
Like for the first sort of 6 weeks of the pandemic, things went real quiet. So we're kind of trying to figure things out. And with everything that was going on around the world, we got super scared and fearful as well. We're like, oh my gosh, is this the end of cycle? Has it changed? Is this the end of cycle?
Ray Dalio came out and said that he's like, this is an unusual event that he thinks is going to be as bad as the GFC. In February, he said that. The first sign of light in the mid-cycle slowdown is generally like a canary who is like a Ray Dalio or a Warren Buffett coming out and going, it's not as bad as you think it is, and people still freak out for another year after that.
Yeah.
But Ray Dalio came out and said that because of the unprecedented amount of government stepping in to support money, bailout money, that this was in April, and then I think Fred Harrison came out with the history. So he looked at the 13 previous mid-cycles. Now, what were they, man? We're talking about that.
Yeah, so 2020 is the most recent mid-cycle slowdown, and we're still feeling a bit of it.
Yeah, definitely.
No doubt about it. And that was COVID. That was brought on by COVID. So generally, this mid-cycle slowdown is brought on by a bit of a black swan event, I guess is what you could call it.
You know,
so,
9/11.
Bang,
The
yep.
stockmarket.com crash was the last one before this one.
Yeah, which is like the war on terrorism.
The one before that was, really, really high oil prices globally and that oil crisis, as well as interest rates starting to like bend in a bad way.
Yeah.
The one before that was the Cuban Missile Crisis. So there's always this black swan event that freaks people out. But generally what always happens before it is there's a massive run up of property prices and stock prices, and that we're all making money, loving life. Excitement can turn into fear, and then that fear can return into excitement very quickly, as it is at the moment. So there's always that event, and these events of the mid-cycle normally last between 9 months and about 2 years on the previous 13, and then we move into this second half of the cycle. Now, why this is important to you is Phil Anderson and Fred Harrison have also come out, as has Ray Dalio recently, and they've all gone, we are past the worst point in this. There's still the hangover though. Like, the world has just had a hell of a night out, or like a bender, and now we're feeling it, and we're going to feel it for a while.
Everyone partying like Robert Downey Jr. in the 90s.
Sending it.
So
it's like, oh man, he had a wild guy.
Him and Charlie Sheen just going for it.
And Johnny Depp.
So that was the mid-cycle slowdown. But then, obviously you can find a lot more information on this sort of stuff. So, what are the books that you've read?
The best one for me is Phil Anderson's The Secret Life of Real Estate and Banking.
If you can't be bothered reading that whole book, we've actually interviewed Phil on our podcast, the Pumped On Property Show. So you can actually head over, whether you listen to it on Apple or Spotify, choose your poison, head over there and listen to it, where Ben and Phil talk in depth about the mid-cycle slowdown, the 18.6-year real estate cycle, and what's coming next.
I highly recommend just going to the last chapter of the book. And if you're a history geek and data geek like me and you love choking through it, then go, it is the most incredible book ever written that no one knows about. That book was written off the basis of 2 books that Fred Harrison wrote. Now, why I love Fred is he's an economist who's been doing his thing in academia for 50 years almost in England, and he wrote a book in 1983 called The Power and the Land, predicting the 1990 financial crisis. He published it 7 years before, calling the month that it would happen. Then in 2005, he published a book called Boom Bust, must read if you're interested in that stuff, and calling the 2007 financial crisis.
Yeah.
Now, what's important is he's already called the next one, as has Fred, as has Phil. They're sort of saying 2026 top, and then potentially some big pain in the years after that. So they're the rough dates that they're working on at the moment.
I just listened to a 4-part series with Fred Harrison on the Shepherd Baldwin podcast as well. Yeah, it was interesting. It was all the information that we already knew and talk about, but for people that don't know Fred or his work or his history, there's an epic 4-part series on the Shepherd Baldwin podcast.
Is it worth listening to for me, or is it like a lot of the regular talk?
Yeah, it's just the same stuff that you know, but for anybody that doesn't know this stuff, definitely it's an easier to digest than a 500-page book.
Well, the books, particularly the first one that they both wrote, was for themselves and for academia, and so it's tricky stuff. And I finished a uni degree and I was in science, and I was still like, oh, that's heavy.
I passed it on to one of my mates who runs a real estate agency down in Wollongong, and I'm like, bro, you got to understand this stuff. Like, you're an investor, you got to understand it. And I talked to him the other day, and he's like, man, I'm struggling. I'm pulling my teeth out reading this book, And I'm like, have you read the last chapter yet? And he goes, no, I'm just working through it. I'm like, skip to the end and then come back.
What happens that normally gets us out of a global financial crisis, a Great Depression, or a mid-cycle slowdown is like, we learn. So a kid hits their finger with the hammer, and then you hit it a few more times, and then you don't want to hit your finger with the hammer anymore.
Yeah, you touch the hot plate.
The reason the Great Depression was so bad, and I was just watching something on biographics, I highly recommend that channel for people that like history, but JP Morgan stepped in and bailed the world out. That's how we got out of the Great Depression. And then since the Great Depression, we've learned so much. It's kind of like since World War II, they wrote like, let's never do this again.
Yeah.
Winston Churchill wrote a book, you know, that's like, okay, this is how bad it was, and showed it in detail so that we'd never forget it. The UN, you know, it's the same with the financial world. So we're getting better and better and better as governments and big business to pull the handbrake before we crash.
Yeah.
But we're still going to have these crashes, and there's still going to be massive blood spilled as a result of them, but we're getting better. So there's 4 things that Ray Dalio, the most successful investor, more successful than Warren Buffett of all time, says we can do, and every government around the world's pulled off all of them in the last year. And that's why Simon and I feel so confident that we are through the worst of it, even though there's going to be specific countries, markets, and people that get belted in the next year as we move through the last of it. I think we're out of the worst.
Yeah, it feels that way, like, and the data shows it. The way that you read CBA updates, CoreLogic updates, you know, the economy itself is looking amazing. You know, 5.1% unemployment rate, property prices on the rise, commodity prices on the rise. So, you know, things are looking good from an economic standpoint, but the way that we feel is still a bit weird.
Without a doubt, you know, it sucks that places are going into lockdown and not. I know every time we do it costs the economy billions.
Yeah, well,
it's rough.
I was watching the news last night, and they're like, it costs like $150 million a day in Sydney right now.
To lock it down.
To lock it down.
And there's people's lives that are getting hurt. And this is the thing, like, it's good to understand the history and the trends, but you've also got to remember that there's people on the other side.
Yeah.
And, you know, while unemployment rates might be improving, there's families out there that are like just keeping it together right now. And so we get that, but we also want you to be on the side of, well, if this is going to happen every 7 to 10 years, and once every 16 to 20 years, you're going to get smacked financially, prepare for it and, you know, use history to repeat. So there's unprecedented government spending around the world. The sentiment in America is let's rebuild America right now. You know, they reckon that the infrastructure is 60 years old and they want to bring it up to now, which is going to create tens of millions of jobs over there in the next 5 years. In Australia, the same thing. I think 2.5% of GDP. Yeah. We've never spent that much money, even after World War II, when all of the vets came back without jobs, on infrastructure. And in CBA's terms, this is going to create an absolute housing boom off the back of it because of the full employment, good paying jobs, and most importantly, the location benefits around all the infrastructure. And
CBA's talking about the potential increase in wages as well because of the undersupply of skilled labour workers.
That and inflation's coming. Like whether you want to acknowledge it or not, it's here. You can see it in the building industry. Prices have gone up by 30% in the last year alone. That's inflation.
Yeah. So what other things happen?
We've got, what else do we have? We've got the printing of money. So I think Commonwealth Bank and the other big banks have just convinced the government to buy another $100 billion worth of bonds between now and September. That's the third round of that. That's just putting cash into the system that was lost. That's huge. They sometimes provide tax cuts, which the Australian government's doing in a big way now. Sometimes they increase taxes to get revenue back as well. If you couldn't afford to pay your home loan, you can still ask for 6 months relief, which is huge. That stops people foreclosing. So interest rates are at historically low levels around the world. Some countries in Europe and America, like some banks are offering like 0.5%, 0% loans, which I still don't understand how they're doing it, but they are.
Yeah, I was talking to a guy yesterday and he's like, you can fix a home loan in America right now for 30 years at 3%.
Incredible.
Didn't compute in my mind.
Incredible. Like, people have said that interest rates might just stay low forever now. Like, that's one thing. You know, who knows what's going to happen. I still do my rates at 5% in my spreadsheets, even today, just in case. Another one they do is helicopter money. So what were we talking last year? Like JobSeeker, JobSeeker Keeper, like, you know, the businesses, a lot of businesses are still getting heavily bailed out at the moment in a big way and keeping themselves afloat because of it. So dropping money for baby grants, for, you know, building your first home, to enter the first home market with free stamp duty. These are all examples of them putting money in the hands. Generally, like, the most effective way to do it is to give it to the population with the lowest 30% of incomes, because they're 1,000% more likely to spend the money than drop it in your account or mine and Simon's, and we're most likely going to save it.
Yeah.
But, one of the things that I think is the most important is Aussies have saved about an extra 140 billion. More than 30% of Aussies are months ahead in their mortgage repayments now. Like, these are big things that are confidence building, because at some point, all of this extra money is going to come back into the stock market, the property markets, in the economy. And that's a beautiful down the line flow and effect of all of this printing of money and all this saving that we've all been doing for the last year.
So many good things, but I guess from there, what do you sort of think, or what does Phil or Fred think is going to happen next?
In their words, like, definitely not mine. I'm way more conservative, and I'm still waiting for this guy's stuff to be not true.
Yeah.
But it's like, the only time in history that they're comparing it to now was the roaring 20s. Like, the Gatsby time. Like, the time in history when things went nuts and people felt wealthy and people were making money.
Yeah, you got to remember that back then that was coming off the previous pandemic. So from 1918 through to 1921 was the Spanish flu, which we've talked about a lot in these types of videos, and over 50 million people died during that 3-year period of that pandemic. Like, far bigger numbers than what's occurred over the last 18 months. So, that happened, and then from there came the roaring 20s, and this is where they were spending bulk coin on infrastructure, so everybody had jobs, and then everybody was spending that money on assets, whether it was investing, whether it was real estate, whether it was starting businesses, and people were just rolling in cash. And if you've ever watched Great Gatsby, like, that's what it was like.
And I wish I was friends with those guys when I wanted to party. But, I think what's important to note here is sometimes when things seem great, they're really bad. And we're putting videos out in 2018 saying, like, we don't know what's going to come in 2020, but it's this is going to happen. Like, and, sometimes when things look bad like they do now, it's actually better than you expect it's going to be, and you may actually regret not taking some action. Like, talk to your accountant, your financial advisor, partner with the right people that know their stuff. And if you're in a safe position and you've got a good buffer and you understand that interest rates will rise, and maybe the bank won't let you go interest only in 5 years' time, which is something that they do at the top of cycles, which causes a lot of foreclosures, and maybe things will get bad in the future again. Of course they will, but things right now might actually be okay. Like, I just look at the fear turned into speculation, and people are releasing products, like celebrities and Instagram influencers and YouTube guys. Like, people are buying and selling cards. They're buying and selling 1,000 different crypto coins, like houses, stocks, bonds, commodities. Like, the world is speculating because people are making easy money. And that's a good thing to be a part of, but you don't want to be the last to the party. You know what I mean? You don't want to be like getting in there in 3 to 5 years' time and going, yes, and getting caught before the next one. You know what I mean? So we always say, be aware, be careful, know your history. Things, according to all of these guys, look okay for the coming years, but the winds of sentiment change that quickly. Positive, negative, positive. I know there'll be some of that. It's just a case of, like, choosing your poison, understanding the risk, and taking advantage of the thing that you know, and then playing conservative and knowing that there's going to come a time at the top of the cycle where property prices don't drop just by 10%, average of 38% globally, and that the average stock market drop at the top is a 50 to 60% drop, not a 30 to 40. These things are coming. It's like what you do in preparation to take advantage, and then what you do at the bottom, which is the biggest thing we've all learnt in the last mid-cycle, that what if you had $1 million that you could have bought stocks at 50 cents in the dollar and they recovered in a year? What if you could have bought Sydney for 500 grand cheaper last year than you could this year, or Brisbane for 200 grand cheaper? Like, what if you had been in a position with this information like our clients were, and the people that have been following us, like, since 17 when we've been talking about this, were to smash it?
Exactly, and that's all that we want. We want people to be educated. Just think about it this way. If you're under the age of 30 right now, you're probably going to go through 2 more full cycles. of investing, and that's 4 of these.
That's 4 more ups and 4 more downs that you can take advantage of every one.
Yeah, and if you're under the age of 40, you've got at least 1 full one left and 2 more of these. So
damn, man, I've only got 1 more.
You're getting old, bro. You're getting old. So
gotta take advantage of this one, baby.
These things have come and gone for the last 300. Well, gosh, there was the book that we found. It was dated like 1,500 years, wasn't it?
Yeah, some guy wrote a book about this like 500, 600 years ago in France.
So these things have been happening since the beginning of money, I guess.
Yeah.
So they're going to happen, and what we just want for everybody is for you to be on the right side of the coin, for you to be on the right side where you are educated to an extent, where you do understand history and how it impacts what's happening today or what could happen in the future, just to make better decisions and, not end up losing your job or losing your home or some of the terrible things that do happen to people at the end of these cycles.
This is a beautiful thing. I think Warren Buffett says it the best, like the market is a pendulum constantly swimming between people who are like overly excited and people who are overly cautious. And it's like all you want to be is like the unemotional middle that takes advantage of the excited people. And I know this sounds brutal, but that's what the market is. It's like, and takes advantage of the fear and, protects themselves against the downside. And it's just understanding that swing, which is just the nature of the universe and the world. There's day and night, there's good times and bad times, there's sunshine and rain. The market is the exact same natural movement, and our job is to get educated and to follow dudes way smarter than me and Simon. Go follow Phil, Fred, Ray Dalio, and Warren Buffett. They are just like constantly putting stuff out because they're all at a stage of life where they want to help people more than they want to personally benefit.
They've done it. And so it's like they're telling you what's coming next so far in advance if you're open to just keeping an eye on what they're saying. And I am so grateful for those dudes that have been doing it for 50, 60 years, you know what I mean? Because for sure.
We can learn from it, and we can not predict the future, but we can remember the past and use that to make better decisions moving forward.
Yeah, thanks for sharing all of that, and we'll keep bringing these types of videos to the channel to try and keep people a bit more informed, and hopefully we can get Phil back on the channel again
100%.
soon as well. That'd be mad. But yeah, guys, please stay in touch with the channel. Please subscribe to our YouTube channel, hit the big red button below, and we're going to continue putting out videos like this, but then also much more real estate, property investing specific videos as well. We do the same on our Instagram page and our Facebook, so you can jump over there, give us a follow, give us a like, and stay in touch, where we're giving you data updates every single day, case studies every single week, and also uploading some different videos on there. As we said, we just want to try and keep people informed so people can make better decisions, take advantage of the good times, avoid becoming unstuck in the bad times, and get out there and invest with some confidence and safely.
100%, guys. Thank you so much. We wish you all the best and the safety and the excitement of the market in the coming 5 years, and can't wait to show you this one in 2026 or so.
Oh, sweaty. So sweaty.